Millionaires from index investing. There have been many people, many investors who've become millionaires from index investing. And in today's video, I'm going to tell you exactly how you can become a millionaire by investing into an index fund or index funds. The funds we're going to be focusing on are all Vanguard funds. Vanguard are a beast of a company, and they have over 7 trillion in global assets under management. So it's clear that many investors trust Vanguard with their hard-earned cash. We're going to go over some Vanguard funds that are definitely worth your consideration, how you can invest via Vanguard, and finally, how you can become a millionaire from index investing. So, the funds we're going to briefly cover are the Vanguard FTSE All World ETF, the Vanguard FTSE Global All Cap Index Fund, and the Vanguard Life Strategy 100% Equity Fund. Right we are. Let's get into it. The Vanguard FTSE All World ETF. This fund invests in well over 3,000 stocks, so it's seriously diversified. And if you know the basics, you'll know that a massive part of index investing is diversification. Basically, you're spreading your risk across thousands of stocks. The ongoing charge, the OCF, is 0.22%, which is very low, and keeping the costs low is an obvious bonus. When you're factoring in risk, Vanguard will let you know the risk of a given fund. The highest risk is 7, and this fund has a risk of 6 out of 7, so it's high risk. So if you're in your 20s or 30s, this might be suitable. But if you're getting on, it might be one to avoid due to the level of risk. If you want to know more about risk tolerance, check out my video all about the basics of index investing. See the video description below for the link. Now back to the Vanguard FTSE All World ETF. And taken straight from the Vanguard website, this index is comprised of large and mid-sized company stocks in developed and emerging markets. Based on a lump sum investment of $10,000, if you'd have invested that sum in May 2012, you would have a total of just over $22,000 as of September 2022. So in 10 years, you've earned well over $10,000 in interest. And that's factoring in the markets crashing this year in 2022. This is a fund worth considering, especially if you've got the time to ride the inevitable market ups and downs. The next fund we're going to cover is the Vanguard FTSE Global All Cap Index Fund. In comparison to the previous fund, this is even more diversified as it invests in well over 7,000 stocks. And this extra diversification is reflected in the risk. Looking at Vanguard's risk gauge, this has a risk of 5 out of 7, so it's fairly high risk. The ongoing charge, the OCF, is 0.23%, so again is very low, and this is something I'm very big on. So just imagine you get 8% returns and your fund charges you 1.5%. All of a sudden you're down to 6.5% returns, and this will mean tens of thousands of pounds are lost to costs if you invest long term, and even hundreds of thousands of pounds lost in some cases. Please be aware of costs. Anyway, back to the Vanguard FTSE Global All Cap Index Fund. This fund is again an index that is comprised of large, mid-sized and small company shares in developed and emerging markets around the world. We're going to use the same method as before to demonstrate the returns based on a lump sum investment of $10,000. If you'd have invested that sum in December 2016, you would have a total of just over 16,000 as of September 2022. So in 6 years, you've earned over $6,000 in interest. This is less than the Vanguard FTSE All World, but the amount of years invested is obviously less. Let's just say you're getting higher interest than the less than 1% interest you get in a high street bank. Another fund worth your time and effort when considering what to invest into, in my opinion. The last fund is my fund that I invest in, and that is the Vanguard Life Strategy 100% Equity Fund. Looking at costs, this fund has an ongoing charge, an OCF of 0.22%, so again very low. And I won't bore you with more talk on the benefits of low costs. In terms of risk, this is 5 out of 7, which is fairly high risk, and that's about my risk tolerance, given that I intend to invest for the next 20 to 30 years. Based on a lump sum investment, a gain of $10,000, if you'd have invested that sum in July 2011, you would have a total of just over $26,000 as of September 2022. So in 10 years, you've earned over $16,000 in interest. Now, a very important point, I lost money in stocks in 2011 and didn't get into index investing until mid-2019. So look on all the interest I missed out on because I buried my head in the sand. Don't get emotional like I did, and don't invest without education. If I was educated financially in 2011, I would be a lot wealthier than I am today. This fund is worth your attention. Just remember, this isn't financial advice. So we've covered some potential index funds for you to invest into, but how do you actually invest? Now, you can invest via Vanguard. There are many investment platforms where you can invest into an index fund. I've mainly used Hargreaves and Lansdowne and Vanguard. Both are very good from my experience, but I do prefer Vanguard because the fees are so low. They are also a Which recommended provider for investment platforms, and this is 4 years in a row. To open a Vanguard account, simply type Vanguard UK into Google or whatever search engine you prefer. In the UK, you can invest in various ways like SIPs or ISAs. Let us say you're going to invest into an ISA in the UK. Once you're on the Vanguard site, scroll down and click on Stocks and Shares ISA. This is a low cost and tax efficient way to invest. The Stocks and Shares ISA enables you to invest without paying capital gains and income tax. You will then need to open an account, make sure your passwords are secure and that you keep them in a safe place. Security is a big one, and you want your hard-earned cash secure. When you've opened your account, it's time to choose your fund. This is where I would take your time and do some research. John Bogle's book, The Little Book of Common Sense Investing, is a book definitely worth reading if you're interested in index investing. Check out the video description below for the link to get your copy of this excellent book. There are many funds available and it's very much dependent on your risk tolerance. I like the Life Strategy funds because it gives you access to thousands of shares and bonds in a single investment. This helps to reduce your risk as it means your investments are spread out with different companies in different parts of the world. Anyway, that's pretty much it for how to invest via the Vanguard platform. Read some books, watch a few YouTube videos, maybe listen to some podcasts so you start really understanding index investing, and then it becomes second nature and you can invest with skill and confidence. To finish the video, I'm going to tell you how you can become a millionaire by investing in index funds. The table I'm about to show you shows you how you can build wealth over multi-year periods with regular investments of various sizes. This table assumes an average 8% return per annum. As you can see, if you invest £10,000 per year, you'll become a millionaire somewhere between 25 and 30 years. This is because of discipline and it's because of compound interest. Please take the time to learn about compound interest as it makes a massive difference to your money if you invest long term. If you invest more per year, like 15,000, you can see you can become a millionaire within 25 years. What you've got to get in your head if you decide to invest in index funds is that 8% per annum is very achievable. But the caveat is that you've got to invest for long periods, because you're going to get recessions, you're going to get the odd year where your fund is down and you achieve -2%, for example, or there's even years where you're going to get -10% or worse. But based on historical data, based on the books, you'll be very confident, or you should be very confident, that the rate of return will revert to the mean, that on average you will get in and around 8% per annum. Now, most investors will be looking at the markets now and will be very skeptical about 8% returns. This is where you've got to double down on your education and do what the experts recommend. Do what the experts have been doing for years. They invest despite market ups and downs. They educate themselves the dollar cost average into the stock market in bear markets and bull markets. They ignore the noise, they ignore the news, and they ignore the negativity. Because if you don't follow the tried and tested methods, follow the experts, you won't become a millionaire investor. My personal opinion is that if you have the discipline to invest for 20 or even 30 years into an index fund, you will become a millionaire. So I've demonstrated how you can do it. The question is, can you invest for the long term? Or are you chasing quick, easy money? That'll do for today's video. If you've liked the video, give me a thumbs up. That would be massively appreciated. And if you've really liked it, subscribe to the channel so I can help other investors.